Hello friends, welcome back to the channel. My name is Sujit Nair. In my previous video, I had mentioned you how to draw trend lines on the chart. I had also showed you the platform on which we use these charts, right? So today let me tell you slightly more about technical analysis. In this, one of the major role is played by the candlesticks, which you can see on the chart. Let us go into the chart. So as I had mentioned last time, I'm into trading view. I'm on the Bank Nifty chart. I had mentioned you how to go about plotting this chart. So if you're still not aware about it, you can watch the previous video. So these are the candlesticks which you see on the chart, right? The green, red, all these ones, right? So I have made a PDF which you can look into it. So what is a candlestick? Candlestick in principle means this, right? This, which the same thing which you had seen on the chart. So why is this green and why is this red? So a red candlestick basically means the open price was on the top and the price closed below the open price, whereas the close price on the green candle will be higher than the open price. So this is in principle the reason why the candles are either in green or in red. So these are the candlesticks, right? So once you understand this, there are two major patterns in the candlesticks, right? One is a bullish pattern, the other one is a bearish pattern. So today I'll tell you four bullish patterns in candlesticks which can be identified, and we can take a bullish trade if we see those patterns, correct? Let's come down. So the first one is a hammer pattern. What is a hammer pattern? Hammer pattern simply means that this candle looks like a hammer, correct? It has a long wick, the open price is below, the selling went down till here, and then the buying happened and the price closed up, correct? So see, the hammer pattern can be either in red or in green, it doesn't matter. Primarily what matters is that this pattern should be a formation after a small correction or a big correction, correct? So as you see in this page, it is very clearly mentioned. This is the low of the day, this is the high of the day. The candle closed almost near the high of the day, correct, and formed a hammer pattern. This is a simple bullish pattern which we always see on the chart. Let me come to the second one. The second and the one of the most common patterns which the bulls like to see is the bullish engulfing candle. Now, what is a bullish engulfing candle? Bullish engulfing candle simply means this green candle or the bull candle engulfed the previous red candle, correct, or the previous bearish candle. As you can see in this chart and on this page, it is clearly mentioned, right? This was a bearish candle. The open price was here. The close price was here. The next day, the price opened here, and which was below here, and then it formed a bullish engulfing and the price closed here right on top, very close to the top. So this green candle has completely engulfed this green candle, correct? Hence it is called a bullish engulfing candle. This is again one of the favorite bullish candle for the bulls if you look at it. Let me come to the third one. Third one is the piercing line. Piercing line is basically means that there will be a big red candle. On the next day there will be a gap down, correct, and post the gap down there will be good buying, and the price will close at least 50% above the previous candle, correct? So this is a piercing line candle. This again is an indication that the selling may have come to an end, and from here the uptrend can uh, you know continue. Let me come to the fourth one. Fourth, again a common one. These are the four common ones. The fourth one is morning star. Morning star basically simply means, as mentioned in this image, the downtrend continues and suddenly there is a small red candle. This can also be a green candle, a small one, and the next day the candle, there is a good buying on this candle the next day, correct, and the continuation is seen. So this pattern is called as a morning star. This again is an indication that the selling which was going on might have come to an end, and further the bullish trend has started. So these patterns are only four bullish patterns. There are many patterns. These four simple patterns can be used very frequently. You can see it on charts. So you can go ahead and open the charts and see these patterns if you can find them, if you can spot them, and see the continuation on the trend, how it how it has happened, how the price has moved. So these four patterns help us identify the bullish trend reversal in any chart, correct? I hope this gives you some clarity. In the next video, I'll come up with bearish patterns, the four most important or the four most common bearish patterns. Thank you for watching. Do subscribe to the channel and wait for the further videos. Thank you.